In this video, I will show you how to get business loans when you have no business assets. In fact, there are 6 types of business loans you can get with no assets. Everybody, welcome to my channel. I am Landaverde, business coach and outsourced CFO, helping you scale your business. Ready to grow your business to 7 figures and beyond while creating the financial freedom and the lifestyle you want? Then subscribe to this channel and don't forget to hit the bell and you'll be notified every time a new video comes out. Number 1, business credit lines. Business credit lines do not require for you to tie up any of your business assets. They work like regular business cards. Instead of using your social security number, you get to use your EIN or your employer identification number, which is your federal ID. There's another video I did last week on the topic of using EINs versus your SSN that I think you should watch. I stay to the end and you'll find out the link at the end of this video. Related to the business credit lines, to me that is like the holy grail of raising capital, which is, a bank will give you a credit line for your business for $100,000, prime +2. You use it as you need it as working capital. You do have to personally guarantee it, even though you're tying up your EIN, but you probably won't get any of cheaper rate than what a bank will offer you. So that's what I call it. That's the number 1. Number 2. There's a product called merchant cash advances, also known as MCAs. A couple of weeks ago, I did a video when I discussed the difference between factoring and MCAs, both tied to accounts receivable. We discussed at the time that factoring is the financing on present invoices, while merchant cash advances are the financing based on future invoices. So rather than tying up your current receivables, which may already be pledged as collateral to another bank loan, an MCA lender doesn't really mind being subordinate to a first position if it is a major bank, and they will give you money based on your future accounts receivable. They do that by using software to determine your average daily balance in your bank. They will probably be looking at just a 1-page application plus 3 months to 6 months of bank statements to understand the flow of your cash and ascertain how much they will give you as a merchant cash advance. This product was originally set up to work with those who, like restaurants or places that would use a lot of credit cards. So that's kind of where merchant cash advance came from. Typically you need about $10,000 a month, no less than $10,000 a month in actual revenue for you to be able to consider. So you might want to be a mature business, have probably at least a year of experience under your belt. Number 3, equipment finance. Now, when I say that this is a type that you don't really need to tie any assets yourself, well, in equipment finance, companies don't need to tie up anything because it's the business, the lending or the loan is tied to your actual equipment that is being financed. So the collateral is the actual equipment that you're financing. You can get some very good rates. In fact, there are lenders who just specialize in equipment type financing. So if you own a machinery or construction company, if you rent equipment rental companies, those rely heavily on equipment financing based on the life cycle of their asset. So those are assets in your balance sheet that are being financed, hence the liability portion tied to that. It's kind of like when you go to a car dealership and you buy a car, even though you have great credit, what the lender is going to secure their property, their loan with, is going to be with the actual asset that you're buying, their car. So you will not have ownership of that car until your loan is paid off, but then you get to drive the car. So it's kind of the same thing with equipment financing. Number 4 is an SBA loan to start a new business. Now, not having assets will be a problem. However, SBA will allow for cosigners with collateral to sign on so you can actually get start a loan with the SBA, you have to be mindful that you have to have decent credit score because the SBA will look at that. It will take a little longer, but it is possible. I've seen it happen. Number 5, an SBA loan to buy an existing business. Now, the best and the fastest way to grow your business is to acquire a competitor or another business. Now, you may acquire a competitor in your line of work, and then you're basically acquiring more market share by buying a competitor, or you can actually diversify into a different, hedge your bets, if you will, with the different types of business. So in case one is not doing well, the other one will. But the SBA provides great rates for you to actually buy an existing business, and you may be able to do so with only 10% down. And the reason why you don't need any assets is because the assets that the SBA will pledge as collateral are the actual assets of the business you're acquiring. Number 6, factoring. I spent a lot of time in a prior video talking about factoring. So with factoring, a third party called a factor, will advance you between 85 and 90% of your current invoices. So you don't need any assets because the assets pledged are the actual invoices. While the factor takes the time and effort to collect on the invoices, you get the cash up front. This is good when you have no choice but to extend 30, 60, or even 90-day credit to your clients because, let's be honest, if you're gonna be competitor and you're looking at it, all of your competitors are actually offering 60, 90-day terms, well, you have no choice but to do the same, but it's gonna put a hindrance on your cash flow, so you're gonna need to be able to monetize those invoices sooner rather than later. The reality is, though, that getting a loan without assets can be a complication. You are probably best off to talk to the experts. Don't feel alone. We actually do this all day long. Feel free to reach out to me or send me a message. I'd be happy to guide you into the right path with the right type of financing. Thank you so much for watching this video. Please comment below and let me know which of these 6 types of business loans would make the most sense for your business if you were to apply today. Also, if you want to join a community of like-minded, successful entrepreneurs just like you, then join our Facebook group at the link below, where I share tips, tactics, and strategies on how my clients are growing their businesses to 7 figures and beyond.